downloading one.
Yours is already on. You can point it to you.
I waited 30 seconds. Should I call it to order now?
Yeah.
All right, I will call the meeting to order. Do you want to do a roll call on the land acknowledgement, Ann?
I'll do roll call. Board Alternate Mickey,
Present?
Board Member Weitzel,
Here.
and Board Member Sue, I'm here, and Chair Rowden,
Here.
and Board Member Ford is absent. Okay.
I will do the land acknowledgement then. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lejeune. We know the genocide that took, or we acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. So moving on to the consent calendar, does anyone want to pull anything?
Nope.
Is there anyone in the audience?
Nope. No public comment.
All right.
So,
Can I get a motion?
I'll make a motion.
I'll second. And I'll call roll just in a sec. Board Member Alternate Mickey,
Yes.
Board Member Weitzel,
Yes.
Board Member Sue says yes, and Chair Rowden.
Yes.
The motion passes.
Still no public?
No one raised their hands.
I guess I will then re-clarify. Do we have any public comment? If anyone would like to make a comment, please raise your hand.
Yes. For whatever reason, I can't allow him to talk. Hold on a second. Jeremy, can you help to bring him in, please?
This is Jeremiah. Can you hear me okay?
Yes.
Thank you. So I've been attending these meetings here and there throughout the years. I was just wondering, is Dodge & Cox the only investment stock that this police and the retirement fire fund is invested in? I mean, I know I've seen presentations on Dodge & Cox for a long time. I checked the stock right now, and it seems it had an $11 increase today, so that's pretty good. It's up over $100 from about 10 years ago. So it seems like every 10 years, the stock increases about $10. I guess an average of $1 or $10 a year, so that's pretty good. But I was just wondering, is there any other stock market or investment company, to use, to invest in, or is this just the only one? Thank you.
That's it.
All right. Does anyone have any announcements?
No.
Moving on, we have our report from Dewey.
Afternoon, everyone. Can everyone hear me okay?
Yes.
Okay. So let me share my screen and I can go over the report. Right. Can everyone see the report okay?
Yes.
Okay. Thank you, Heather, for confirming the meeting. Actually, and it was good that I could join over Zoom because I just got over a cold and I wasn't able to join in person. But I'm looking forward to seeing everyone in person at the next quarter meeting. This is a summary of the pension account this past year for 2022. At the end of the year, this is the current allocation of the account, about 4% in cash, 42% in bonds, and 54% in Dodge & Cox stock fund. And just to comment on the public comment, yes, Dodge & Cox stock fund is the only stock or equity investment that the pension own currently. It was approved to be in the portfolio by the board over 10 years ago, and this is what we follow and we invested in, or maintain the investment in Dodge & Cox fund. So the pension account, just to reiterate, is invested based on a balanced approach. So 50% bond and cash and 50% stock. Stock did actually relatively well and did better than bonds last year in terms of the Dodge & Cox fund and the stock fund versus the income fund. So the current valuation shows that the higher allocation to equity. It's because of the performance of the fund over the last 12 months. This is the change in market value in the portfolio for 2022. At the beginning of the year, the account was $3.5 million, 3.576. $600,000 was withdrawn. The income, basically the interest received and dividend received from the investment, $54,145. The change in value went down $369,000. So the total return which is the total of income and capital gain or loss, is $315,000. So giving the end of the year balance of the pension account, $2.66 million. For the account, this is a summary since inception of the cash. Balances in the account started out with $10.9 million. Total of $14.5 million withdrawn from the account. Close to $2.3 million in income received and close to $4 million in capital gains. So total return was about $6.27 million. And that gives the ending value of the account at the end of the year, $2.66 million. This is the summary of performance for the account for the year 2022. Overall, the account was down 8.67%. Last 3 years average 3.1%. And annualized since inception, so since September 2009, the account returned to 6.62%. I talked a little bit about bonds went down more than stocks. So fixed income actually went down 12%, 12.38% last year. Average last 3 years was down 1.93%. But since inception, fixed income, the bonds portion of the account returned 3.44%, with lower volatility overall. So it worked as intended. Last year was just a very unusual year, and it's the bonds actually did worse than stock. In terms of stock, the equity portion, over the last two years or so, Dodge and Cox fund performed very well. If everyone on the board may remember, a few years ago, Dodge and Cox comparing against the S&P was underperforming the S&P, and that was the purpose of the investment. It was more value focused and income focused. The previous few years, the market was more focused, or the S&P was more focused on growth, and the return was much higher. Now, last year when growth was sold off, if you look at the S&P last year, it was down 18%. Dodge and Cox fund was down 7.25%, and versus the Russell 1000 value index, you can tell over the last 3 years, and since inception, Dodge and Cox had outperformed pretty much across the board. So that was the reason we maintained the investment in the fund, as well as the reason part of it was the approval from the board to stay in the fund. And in the time of volatility, they did better than the overall market. Anyone have any questions before I move on?
No questions.
Okay. So similar to the previous quarters, I'm going over our firm outlook for this year, for this quarter. Before I do that, this is a summary of, a look back of market over the last year. As I mentioned, S&P or U.S. stock, pretty much the S&P was down 18% for the year. International stock did a little bit better, but was still down 14%. Emerging markets was down 20%. If you look at the bonds portion in this page, long-term treasuries were down 29%. And this is an unprecedented kind of performance just because of how far interest rate went up last year. Long-term treasury or treasury that are 20 years or longer. So for 20 years or longer, any 1% movement in interest rate can translate into about 15 to 20% return in drop in price. So that works out to long-term treasury down 29%. Intermediate bonds went down 8%, and high yield, which is junk bonds, were down about 11%. Now the Dodge and Cox Income Fund, due to the previous decades of really low yield on bonds, they have to go longer in terms of the type of bonds that they hold. That was the reason for the underperformance and the drop in share price in the Dodge and Cox bond funds. Earlier this year, in the summer of this past year, 2022, I did add a little bit more on shorter term bonds. So it stabilized the return a little bit and earned a little bit higher in interest, just because right now interest rate on shorter term bonds quite attractive, and that also works into the cash needs for the pension. So the shorter term bonds will work into providing the liquidity needs over the next few quarters. Going over the investment themes for 2023, our firm believes that inflation for the inflation actually are starting to come down over the last 3 months. Month over month, inflation has trend down, so negative increase over month over the last 3 months. Year over year is still high, it's historically high, comparing to still in the 40-year high kind of range. But the trend is coming down, and that's a good thing. But we believe it comes down at a cost because of rising rate. Remember last year, the 3 main things that we talked about at every quarter was inflation, the Fed rate hikes, and risk of recession. So they all tied together. With inflation rising, the Fed has to raise interest rate to fight inflation, to bring it down. And as the Fed raise interest rate, the risk of recession start to go up. So we do believe that there are signs that inflation has slowed down. On the Fed, it likely that we are near the top of the rate hike cycle. The Fed is not going to confirm it because they need to see more data, and they need to make sure that inflation won't go back up when they start confirming that this is the top end of what they're looking at. But we do expect data to come in softer, and the Fed will likely, not right now, but in 6 months or so, we'll start talking about where they think rate is at the top, or what they would do next. With that, the risk of recession has increased significantly. So we do believe that likely the U.S. economy will head into a recession this year. Although we have a very strong labor market, very tight labor market. If the U.S. economy hit a recession, it's likely going to be a mild recession. And with that, we do believe the stock bear market that we experienced this last year is closer to its final stage. Once the U.S. economy, excuse me, once the U.S. economy hits a recession, it's more of a reset for the stock market, the equity market, and that's when a new cycle can begin. So we do expect the first 6 months of the year likely not going to tell much. We will still have this volatility in the market, but the second half of 2023 likely will be significantly better based on what data we expected to see over the next few months. I talked a little bit about U.S. economy. So good news, bad news. Good news is inflation is coming down. Bad news is recession risk is rising. So there are data to show that corporations start to cut back with reducing headcount and reduced spending. The consumer, U.S. consumer, over the last year, even though the market was in significant volatility, the U.S. consumer, with the talk about inflation and recession, the consumer has been very resilient. So spending on the consumer didn't change much in 2022, but it started to kind of signs of pullback started to emerge just because of the talk of it could be the very strong labor market carryover that helps the consumer, but when you have corporations start cutting headcounts, then it could start a cycle of pullback from the consumer. Overall, global economy, last year, about this time last quarter, we talked about how China affected the global economy with zero COVID restriction. Well, in November, they started to ease, and it came from zero COVID to it's now we have to grow the economy again. So it's actually helped the global economy with China opening up, although there's still a lot of work. Investors are looking forward to more returning to normal in terms of China and economies around the world. I'm going to skip this page. We talked a little bit about Fed and inflation. In terms of U.S. debt, the cost of debts are rising just because interest rate has gone up significantly. So the market is right now, the immediate worry is the debt ceiling right now, because it could really affect the stock market and bond market significantly if the government can figure out the situation with debt ceiling. In terms of equities, I talked about the three things we were looking at last year: inflation, Fed interest rate, and recession. And recession, it's corporate profits, corporate earnings. When companies start to cut back, corporate earnings, it's going to hit corporate earnings. So, but that's not all bad. It's a lot of it has been anticipated that if we head into this way, the profits will start to come down. When we actually see the number coming down, it's actually when the market can look forward to a new cycle. So overall, we're near, this past quarter have shown that company has cut back significantly. So we may not be too far off from the bottom as we see it. I talked a little bit about international as well, but the key thing, the pension account doesn't own any international, but our view, at least in this environment, over the next 12 months, international present an attractive position to be in just because of China opening up and, developed international market, specifically Europe, got hit harder last year in terms of the economy, how it got hit. Valuation in international stock is a lot more attractive than U.S. stock at the current level. So over the next 12 months to 18 months, international present a better opportunity in terms of where to put the money. And this is an interesting slide that I want to discuss, and it's kind of reiterate what I talked about. It's not too bad when we head into a recession or we have a confirmed that the U.S. economy in a recession. You can see in the title, recession, good news for stock. So over the last 10 recessions, if you look at the table on the right, the S&P bottom. So the first line, the number of months from recession start for the S&P to bottom, on average, it's about 6 months. So within 6 months, the S&P bottom. Now, the number of months before the recession ends, on average, about 4 months before the recession ends, the S&P find a bottom. And when you look at the next 12 months after a bottom is found, the return in the S&P was on average up 33%. So if we have, and I said a lot of ifs, but we do believe that with the data we have, likely the US economy will head into a mild recession. If we do have a mild recession, short one, then over the next 12 months, we may be in for a better recovery than what we saw in the past 12 months. Don't own any hedge funds, so I'm going to skip this part. So our view, going forward for this quarter, still global equities, we maintain neutral, meaning that we just keep the weighting. We don't see stock as very attractive. Like I said, within this first 6 months of this year, likely it's a lot of the up and down that based on the data, but maybe second half of the year, depending on what data comes back, we have come back with, we may change our view on equity. Fixed income, it's actually more attractive now comparing to last year. Now, last year we maintained the underweight. We still maintain an underweight just because we do believe Fed still plan to raise interest rate, but comparing to last year, the number is a lot more attractive now. If we need to raise more cash from the portfolio for distribution, I will balance it between equity and fixed income. And that makes the end of my presentation. Any questions that I can help answer?
No? No questions.
Looks like we're all set. Thank you, Dewey.
Okay, perfect. I thank you so much, and I look forward to seeing everyone next quarter in person.
Thank
Sounds
you.
good.
Thank you.
All right, so now we're on to item 6, 6.1, Organization of Officers.
So this is annually, we have to, per the charter, we have to pick a chairperson and a person to serve as the secretary. So historically, it has been the city treasurer being the chair, and I'm usually the secretary. So if anybody have any nominations or suggestions, speak up.
If I can nominate Heather as the
Chairperson.
chairperson? Yeah, Heather as the chairperson and Ann as the secretary. Or is it one followed by the other?
No, that's right. I'll second.
I didn't know if I could do that.
I don't know if I could either, but somebody needs to second.
It's done.
I can second other one.
Okay, great. Okay, board member alternate Mickey,
Yes.
board member Weitzel,
Yes?
and I vote yes, and Chair Rowden.
Yes.
So all yes, the motion passes.
All right, so on to item 7, future agenda items. Does anyone have anything that they want to add? Perfect. Our next meeting will be April 25th at 3 p.m. And with that, we are adjourned.
Thank you.
Thank you. We don't need to check the audience.
Recording stopped.
There's no one raised their hand. It's only Jeremiah. And he didn't raise, he knows how to raise his hand, so.
Did you got a second?
And it'll be back in,
Okay.
it'll be here.
You want to ask me, Chitty?
Thank you.
And so I'll finish my report. Do I have to put in there the hotel or the actual conference?
Give me a second. Let me go hit stop because Jeremy